And hello, everyone. Welcome to this Thursday edition. It's for 2023. And this is the Triangle Blockchain Development Meeting call. Tonight we have Eric Moore as a special guest. He's going to be giving us an update to, of course, Sears. And so without further ado, Eric, you have the floor.
Okay, thank you, Blair. Thank you, Blair. Hello, how's everybody doing? How's everybody doing?
Hey.
Great.
Doing
Hi,
great.
Eric.
How
How
are
you
you?
doing?
Okay, good to go. So quick question, everybody's good, everybody's good. Has everybody seen the motion that I filed with the court? I think it was March 14th or March 15th. Has everybody seen that on the website or read it?
Yes.
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 Yes. Yes.
Yeah.
Yes.
Okay, good to go.
Yes.
All right, so we're gonna go over the important parts of that motion really quickly. So I can show everybody kind of what to pay attention to as far as where we are now, because the liquidating trust did respond to the motion. They responded to the motion, but they didn't address anything on page 9. And page 9, the title, the subheading of page 9 is liquidating trust has over $5 billion in cash/assets against unsecured bond debt of less than 750 million and PBGC debt of less than 900 million. So that is a fact that it's roughly 750 million in bond debt left. Yeah, go ahead and pull us to page 9 if you could, Blair. And the PBGC is the Pension Benefit Guaranty Corporation. That is the government entity that oversees the pensions in the United States. So the pension debt is roughly 900 million. In the Chapter 11 plan, don't remember the page number, the pension gets the first 90 or 97.5 million or so, and then the rest of the money is on a pro rata basis with us. So the remaining roughly 800 million and the remaining roughly 750 million that we're owed on the bonds is on a 50-50 basis. So if you take $5 billion and you deduct it from 900 million plus 750, you get about 5 billion minus 1650. Now, I said over 5 billion if you pay attention to that, but we're just going to use that number. So if we take 5 billion and we deduct 1650, we get what, Blair, about 3350, something like that. I think that's about what we have. So we'll have about 3.35 billion left, and this is just cash and assets. So the liquidating trust said that they never said they didn't have this much cash. They said that they haven't made payments to the PBGC to equal the amount of the secured debt that they're owed. So there's a secured debt of roughly 97 million that goes to them first, and then we go 50-50 on everything else that's left. So the remaining claim again for the pension is roughly 800 million, and the remaining bonds, all the bonds we own, all the remaining bonds, whether they say Sears Holdings, whether they say Sears Roebuck, whether they say Sears PIK debt, PIK, all of that is roughly $750 million in total. So if you take 5 billion and deduct it from 1.65, until you get about 3.35 billion in surplus. So what I've been trying to explain, which is somewhat difficult sometimes, is the only thing that matters with an investment is the math. There isn't the opinion of a person online or opinion of a person in the comment section has nothing to do with the math of an investment. Investing, especially value investing, which is what I do, it is not difficult from a mathematical perspective. What is difficult is listening to people online and allowing them to get your focus off of the math. And in this case, it's a legal case and a mathematical case, right? But when it's all said and done with any company, whether they're in bankruptcy, whether they've exited bankruptcy, whether they're not in bankruptcy, it's assets minus liabilities, which in the stock market is called book value. And with a person, it's called net worth. So the book value of a company is assets minus liabilities. If there are a whole lot of assets left after you pay your liabilities, the surplus goes to the shareholders. But bondholders and other creditors have priority over shareholders. So bondholders get paid in priority before shareholders. So if $1 billion is left at a company and there's $900 million left, if $1 billion is left at a company and there's 1.1 billion in debt, the bondholders would get paid and there would only be $100 million left for the shareholders if the bondholders were there. So I got a lot of texts and emails over the last few months, and I didn't realize that people did not know that's what's called the absolute priority rule, right? So an absolute priority rule in bankruptcy means that lower tier creditors don't get paid before higher tier creditors. So it's the same thing with a mortgage. If you have a mortgage and Bank of America has a first lien on the mortgage, and you have a second lien and a third lien, the second and the third position in the mortgage do not get paid or get any money until the first position has been paid in full plus interest. That's exactly how bankruptcy works. So what Eddie Lampert did, that even some of the lawyers working the case are unaware of, even though it's documented, is Eddie Lampert was in the first position for debt. If you look at paragraph number 29, and I'm going to read you from the motion, and everything that I'm reading you is documented in the court record. So if you're reading something online and they're showing you one paragraph or one clause in a contract or one sentence, you have to ignore it. You have to ignore it because it's roughly 11,000 documents in this case. So I could literally point to different lines and different paragraphs in various documents and not give you the context or not give you the complete view, and you would think that your stock was canceled or wiped out or what they call extinguished, which means it's completely wiped out. So you have to be very careful that you're following the facts and you're operating from a foundation of facts, because if you start with a lie, you're going to continue to believe what's happening. If you're spending a lot of time online, with the exception of laughing at some of the stuff that's being said, you're wasting your time, because the facts that are laid out in this motion were not denied by anybody in the Sears case. Nobody. I'm going to read you paragraph 29 in the motion and show you what subordination is. So remember, I'm giving you a home example. Eddie Lampert is the first position in the mortgage. Bondholders are second. Unsecured shareholders are third. And shareholders would be fourth. So I'm going to pull this up. I'm going to blank my screen out so I can read this real careful. This is paragraph 29. I'm going to read this real short. Okay, paragraph 29 says, the first source of recovery for general unsecured creditors, including bondholders, is the subordination of the $2 billion in senior debt owned by ESL and the contribution of the same, of which 1.3 billion was credit bid. According to a declaration filed by Kunal Kamlani, this subordination creates a recovery for unsecured creditors. So this is $2 billion in senior secured debt. I want to make sure I'm clear with everybody on what that is. When a debt is secured, it's the equivalent of a home worth $2 billion or a building worth $2 billion. So Lampert not allegedly, let's just assume he sold. Well, let me just tell you what the collateral was. The collateral was some of the real estate and a lot of the inventory. That $2 billion in inventory and real estate was sold and liquidated to cash. And in this particular declaration, which is a sworn affidavit to the court, the current head of the liquidating trust said that is what would create a recovery for the unsecured creditors. And if you go to footnote 18, it's document 2356, page 6 at 13. And I said, see also document 892, page 20. Now, if we take this $2 billion and we put us in front, Because remember, guys, this debt was subordinated. So Eddie Lampert was 95% of the debt. There is nobody else to pay. So because this $2 billion was subordinated and recontributed to us, and if you read this particular page, you'll see it, we're literally next in line for that $2 billion. That $2 billion was recontributed to us. It was used to recapitalize the company. And then if you read the rest of the paragraphs, it shows you the other money. And I'm going to read you the other paragraph because we went over this a lot of times. I'm going to read paragraph 30 really quickly. Paragraph 30 says, the second source of recovery for general unsecured creditors, including unsecured bondholders, that's us guys, is the $3.9 billion in previously unencumbered assets securing the junior DIP loan of $350 million. Of these assets, at least $1 billion was obtained from the sale of Innovel Solutions to Costco. So we went over that already over and over. So there was a loan against $3.9 billion in assets that belonged to Sears. The loan was only $350 million. The loan has already been paid off. So the difference between $350 million and $3.9 billion does not just go to Eddie Lampert, because Eddie Lampert was not the only shareholder. We are 50-50 with him. He owned roughly 50% of the stock, and we own roughly the other 50. So you cannot take $3.9 billion in collateral, secure it with a loan of $350 million, and get wiped out. I want to make sure I'm clear, because I noticed that I've literally went over that particular point probably 15 or 20 different times in almost in every video. But I want to make sure that with this call and with this video, that everybody is focused on the math. Is there anybody here that believes that $350 million is more than $3.9 billion? I doubt it. So if you go through the motion, you look at the footnotes, you'll see the judge confirming the value of the collateral owned by Sears that was unencumbered, and the loan we got was only $350 million. I'm going to give you another home example. You get a house worth $5 million. You own it free and clear. You borrow $350,000 on a mortgage. You pay off the mortgage to Bank of America. The equity in the home is yours. It's really no more complicated than that. If you focus on the math and not what's being said online and not what's documented, you'll be okay. I know it's very challenging for most people to do that, but there's nobody online since you've been involved with this investment, since Blair, Triangle Blockchain Group, since Mills Moore, since some of the bigger holders, there's nobody that has put any math online to refute what's in the court record. These are not Eric's numbers. These are not numbers Eric came up with. These are not numbers that came off the top of my head. This motion is sourced and everything is documented in the court record. One thing about value investing that's very difficult for most people, sometimes you have to wait only a few weeks. Sometimes you have to wait a few months. Sometimes you have to wait a few years. But the waiting is not really difficult if a crowd of people online are telling you you're going to get rich or telling you that you're correct. But the high levels of value investing require that you stay focused on the math. The higher levels of value investing will be investments where the crowd disagrees. And you can't disagree with math. 3.9 billion minus 350 million is the same whether you agree with me or not. 3.9 billion minus 350 million is the same regardless of who online says it's different. So the facts in the court record that are documented here, it's all footnoted. None of the attorneys said, hey, this guy's out of his mind. He's off his rocker. This money doesn't exist. He misinterpreted how this money is going to be dispersed. There is no 368 tax reorganization. He's in left field. And that's exactly what would have been said in the response if that was the case. So if you focus on those two, paragraph 29, and paragraph 28 through 31. Until somebody can show you that that information is inaccurate, it's mathematically impossible for us not to be paid in full. And nobody would allow me to file this motion and it sit out there for 4.5, 5 weeks. And in something that significant, the whole world says this company is broke. I file a motion, or they think Sears ended up broke after the liquidation. And let me correct myself. If this did not exist, if this money was not there, there is no way this motion would not have been stricken from the record, and they would have literally addressed each paragraph and showed what was wrong with it or how inaccurate it was. So that is the most important thing to focus on. It is not about the people talking online. It is not about what the crowd thinks. It's about what the court record says. And I don't want people relying on what you think I understand. This information is right there available to everyone. This information and the math is not going to change if we don't do another update for another day, another week, or 6 months. There is nothing to update if you understand the math. So what we're working towards is finding out the time frame, because at this point we don't have a time frame for the payout or for a payout announcement. Now, the liquidating trust has some of the money that is going to be dispersed, but the junior dip is the 3.9 billion. That is likely who will be doing the disbursements to us. And the subordination of this $2 billion was done partially by the second lien bond agent or the second lien facility agent. That particular agent, they have an account called that one, or the junior dip. The account is called the unencumbered proceeds account. It's blocked out and is sealed on the court record, but it's an account at Bank of America. So the unencumbered proceeds that were sold, like the $1 billion from Innovel, goes into that account, and we get paid out in a priority. The priority of our payout is document 892, page 20. And we are first because Eddie Lampert put himself behind us. So instead of being in the first position to get paid, Eddie Lampert put us first and himself last. So this money here equals more than $5 billion. The debt owed to the bondholders, less than 750. Debt owed to the pension, less than 900. We still have Kenmore. We still have Craftsman by Sears. We still have over 500 pieces of unencumbered property, over 5,000 acres of land, all unencumbered. We still have the online business, which was doing between 1.6 and 1.9 billion over the last few years. We still have Sears Home Services. We still have the insurance contracts. We still have the Shop Your Way credit card, all making more than $2 billion a year in gross, and most likely $1 billion in profit. We have ESL was our largest lender and our largest shareholder, and as a part of the tax reorganization, or what they call a merger or a consolidation, his stock eliminates and his debt eliminates. So we are likely a debt-free or close to debt-free company. We just don't have a time frame just yet. So we're working behind the scenes to find out the time frame. As you know, they withdrew the default on the 2018 and the 2019 bonds on about November 2nd. That's when we had what everybody called Millionaire Monday. We're waiting for confirmation from the bond trustee and a copy of the original withdrawal of default. We know Morgan Stanley E-Trade got it, and we assume that all the other brokers got it. They probably threw it away. When a company is in bankruptcy, a lot of times the brokers and sometimes even the bond trustees and some of the attorneys in the case, if they're not making any money on the case anymore or don't expect money to come in, they don't read the notices. And the notices might come 3, 4, 5, 6 times a week. So they'll see this mail from Sears Holdings. They don't know it's an official legal notice, and they just throw it away. So that is common in cases that last 2, 3, 4 years. They just don't read it. Now, if they're making money and they're working the case, they're going to open it and see what's going on. So that's probably why it's so difficult. When you contact your broker, nobody's got a clean answer. Nobody really knows what's going on. Sometimes they tell you the bond default has been withdrawn. Sometimes they say where it has, but we don't know if the money's coming, things of that nature. So we're working behind the scenes with our bondholder committee, because our group, along with Raul and Barnett Capital, as you saw, filed with the court, we own more than 37% collectively of the 2019 bonds and roughly 12 to 20% of the 2018 bonds. And that gives us certain benefits and privileges and rights to get things done, which I'll be reporting to you guys later. So in a nutshell, if you're focused on the math, you understand that mathematically we cannot be wiped out. There's nothing legal that can happen to take the money away from us because there's nobody left to be paid. So I just want you to understand that it's a company the same way it's like a house. If you pay your mortgage off and you don't owe taxes, there's not a legal way the mortgage company can take your house. It's just that simple. There is no way for Bank of America, if they're your mortgage company and you paid your taxes, you don't owe the IRS, they cannot take your home. So I know people are saying they think they could get ripped off somehow. We might not get paid. Well, it's no different. It's a company instead of a house. And there's nobody in front of us to get paid except for the small amount that the pension is owed. And as you can see, $5 billion is a lot more than the $90 million that they're supposed to be receiving. So I think that's the gist of it, Blair. I think I'll take questions from anybody from here. But that's it. That's the current update. I don't know if we're going to have a hearing. The court has been in touch with me. I don't know if a hearing is necessary. And I may be filing, because they basically complied with the motion. They're going to file what's in the liquidating trust, which is not our only source of payment. I want everybody to understand that. The liquidating trust might show that they've only got $60 or $70 million. But there are 3 or 4 entities, including Transform, the junior dip agent, the second lien facility agent. This money is in one of those 3 or 4 places. It does not have to be at the liquidating trust. And the bond trustees did email me. They said, when we receive the money, we're going to pay the bondholders immediately. They did email me that. Now they're expecting some money from this. They're not expecting money from the liquidating trust. They're expecting it from somewhere else. So I'm asking and communicating with them about where they expect it to come from. But the only other place it can come from is the sources I list on page 9 in this motion, because our collateral was held by the junior dip agent. So that's a trustee for the junior dip collateral. That's the person holding the $3.9 billion, and the loan was only $350 million. We already know that that loan was paid off. So if the loan's paid off, that collateral is there. It's been liquidated to cash. Most of it, at least, well, not most of it. We know $1 billion of it was liquidated to cash because that's how much Innovel Solutions sold for. Okay, so we know that money is there, and we also know the income from the online business would be there, and the income from the inventory that we sold would be there. So it was $1.657 billion in inventory that went over to Transform, and that is on top of the $5.2 billion in value for the sale. So if you pay attention to the press releases said it was $5.2 billion for the sale, but it's actually $5.2 billion plus $1.657 billion in inventory. You can find that in document 1730. Not sure what page, and you can also find it in the appellate documents for the second lien. So the actual value was 5.2 plus 1.657. So you get closer to 7 billion. All right, so I'm going to take questions, Blair.
E, you want me to pause it and then start it again like we did before?
Yeah, you can separate the Q&A from this part, and we'll just post the questions. We'll post the questions separately. And let me make sure that we're clear. No broker questions, and primarily mathematical questions and questions about what's going on, but nothing that you can call your broker about or nothing you should call your broker about. Let me say this very quickly. I did get calls from some people, texts from some people, emails, which are fine. And people were asking me extremely basic questions like, if I buy a bond or if I buy bonds today, does that dilute how much we get paid? So if you don't know exactly what a bond is, it's easy. You go to YouTube and say, what is a bond? and you watch 5, 6, 8, 9, 10 videos on it. What is a stock? What is the absolute priority rule in bankruptcy? You have to do at least the basic research. If you want to have outsized returns, most investments, 99% of value investments are not complicated like Sears. But if you allow people online to tell you whether or not something is in the court record and you won't check yourself, or you're waiting on a crowd or a consensus, you won't be able to make any money, because the consensus, by the time it's a consensus, the opportunity is going to be gone. So the basics of what a bond is, what a maturity date is, what does it mean for the default to be withdrawn on a bond? You have to research this information. You have to know what the absolute priority rule is. If you don't know what this is, you'll think that I'm crazy when I say it's mathematically impossible to be wiped out. The same way it's impossible for the first lien on a mortgage of $100,000 on a $5 million house not to be paid when you sell the house for $5 million. If it was $1 million mortgage on a $5 million house that's sold for $5 million, it's impossible for the mortgage company to lose their money, because the loan is only $1 million and the house sold for $5 million. And we're not talking about something that's gonna happen. This stuff has already been sold. We've closed 95% of our stores. The inventory has already been sold. Innovel Solutions was sold for $1 billion. Deinhardt was sold for $200 million. Because Eddie Lampert put us in the first position, with the exception of that 97 or so million to the pension, it's no way, quote, for him to rip us off. He's not the person who rips people off, but there's no way mathematical for it to happen, because we're literally first mortgage on a property that is worth many multiples more than the loan. If you take 350 million and you borrow 3.9 billion, it's 10 times the value of the collateral, more than 10 times. And that's roughly how the loans went. It was roughly 10 times. So it's impossible. We only owed 350 million. We had 3.9 billion in assets, plus the assets were earning money, because that included the land and it included the income from the remaining assets, including the online business, which was profitable and is very profitable today. So there are no more losing stores whatsoever. So anyway, we can go to the Q&A, Blair, unless you wanted to put something more on this part of the call.
Just hold it right there. That was brilliant. Thank you for that. That made it to the first section of the recording. Thank you for that.
Okay.
Hold on one second.
Okay, thank you, Blair.